Hey, Trader Bear back with another video. And in this video, we're going to be going over a simple yet profitable 1-minute strategy that you can use and practice trading with as a brand new binary options trader on the Pocket Option platform. Now, this technique is something that I picked up on from another trader and that I have been using for quite some time in my actual strategy. And the only indicator you're going to need for this one is an indicator called the Stochastic Oscillator. So if you haven't already done so, make sure you go up to the Indicators tab on Pocket Option and select the Stochastic. Once it's checked off, we're going to leave all the settings on default, as you guys can see. And now, let's talk about what it is that we're going to be looking for before getting into the backtesting portion of this video. Now, as we're looking at the Stochastic Oscillator down here at the bottom of the screen, there's a few things that I want to point out to you guys. Number one, make sure your settings are the same as mine. Though I didn't have to change mine, some of yours might be a little bit different. Just make it like this. Number two is the amount of things that we see here on the screen. So we do have a few things going on right now. You see these blue and orange lines are actually what's called momentum in the market. And as we know, momentum pushes either up or pushes down. Now, aside from the momentum markets, we have this greenish blue bar here up top, and we have this yellowish orange bar here down at the bottom. These two bars are what we are going to consider our overbought and oversold bar. Now, what we're looking for in the stochastic is to see the momentum either come up above the overbought or the top bar, or come down below the oversold or bottom bar. This will indicate to us that we should start looking for a potential entry here on the charts. But be patient, people, because though this is a 1-minute opportunity, we still need to wait for the perfect entry point. Now, in terms of the entry, we're going to use a technique where we are not going to enter the trade until two things happen. So there's two confirmations that we're looking for. Confirmation number one is that once the market enters either overbought or oversold, in this example, overbought, we want to see those two blue and orange lines cross each other going in the direction that we're looking to trade. Right here, we are looking to trade down for the sell. So that would be the first thing that we're looking for. But we don't enter just yet. You see, in order for us to enter the trade, we need what's called a confirmation candle. And what I like to do is when I see that stochastic cross, I like to wait for the next candle to make sure that the candle that we're currently on closes in the direction that we're looking to trade, in this case, red or down, and that the next candle opens and continues to go down as well. So about 5 to 10 seconds into the candle, I would go ahead and hit the sell button. So to clear this up a little bit, let's go ahead and backtest this theory a few times. And as we're backtesting, I'm going to be showing you both examples that did work and didn't work. And I'm going to explain to you why we wouldn't have gotten into the ones that did not work. So let's start with this very first example right here. If we're looking at the markets, we have just nearly touched the oversold area. We're at the orange bar, and we get the stochastic cross going up. If we go ahead and put the vertical line at the exact point where it crossed, as you guys can see, it crossed right here on this candle. So what would I have done? Well, I would have waited for the candle to close. And as the new one opened, right here at this point, this is where I would have entered the trade. As you can see here, green, green, green. If we would have entered the trade for 1 to 2 minutes, we would have cleared absolutely in profit. Let's move to the next example. Moving a little bit further back, here would have been another example where we touched at or near the overbought or oversold area. In this case, this was overbought. The stochastic crossed right here at this candle. But would I have entered the trade? No, absolutely not. Why? Well, if we're waiting for our new candle to open, the new candle opened and the markets actually went up. This was a green candle, so our confirmation candle did not actually confirm. Moving back some more, the next example is right here, and this is a lot better. Typically, you want to see the stochastic in the actual overbought or oversold area. Trade examples where it just touches but doesn't actually enter the area, well, those are more of a riskier trade. So let's look at this one. We got our stochastic cross right here. The candle closed. We would have entered on the next candle right here. And as you can see, if you would have entered the trade for 1 to 2 minutes, you would have been into deep and heavy profits. These are two back-to-back examples that we just won in a row. Here's another one where we're looking for a sell. The stochastics crossed right here on this reversal candle. We go ahead, we enter at the open of the new one. And as you can see, if you would have entered for 1 to 2 minutes, you would have cleared. Let's move back just a little bit more. Here's another example. Stochastics crossed here. We enter at the opening of the new candle, and a 1 to 2 minute position would have cleared this as well. Well, hopefully this made sense to you, and I do want to remind everyone that it is not possible to clear 100% of your trades. But just by using this simple technique that I've taught you today, and pairing that up with just getting good with trading in the markets, understanding support and resistance, and reversal candles, you can absolutely dominate and make a load of money trading binary options. So hopefully you enjoyed this video, and if you did, make sure you give it a thumbs up, subscribe if you are not already subscribed, because here at Trader Bear, we're here to help. See you in the next video.